segment and looking at what consumers may be seeing on the grocery shelves, they might be seeing an emerging war on breakfast. And it's not just coffee, it's pork that has been affected by lower hog inventories with a disease in 30 states. It's the drought in California affecting fruit prices. What should consumers expect, and is there anything the USDA can do from the supply side?
Well, consumers can continue to be what they are, which is sharp consumers, which is why we're looking at food inflation at somewhere between 2.5% and 3.5%, which is within historic norms, Alan. Look, USDA can focus on research. We can look at the long-term impacts of climate change, equip producers with more tools and technology to respond to the long term. Short term, I think people are just going to have to be good shoppers, and I think they will be, and I think that's why food inflation will still be within historic norms.
One of those issues you see in California, along with the drought, of course, is their ongoing labor issues, simply being able to get the fruit out of the field. Immigration has been an issue that's been a hot button topic for a long time. There's been some signs of some movement on that issue just in recent days. Is this interest real, and could we get a bill passed this year?
I sincerely hope so. American agriculture needs immigration reform. The reality is we are doing not as much as we could in agriculture in terms of harvesting crops that are being grown simply because we don't have the hands to pick the crops. We're not planting as many crops as we could simply because we don't have the hands to do so. Comprehensive immigration reform is absolutely essential to American agriculture if we're to realize the fullest potential. It will also help reduce the deficit. It will shore up Social Security. It will strengthen the border. It's frankly long overdue, and hopefully the House will act this summer to get this done.
And looking from your vantage point as Secretary of Agriculture, you have a perspective on the rural economy and all the forces at play, perhaps more than anyone in the U.S. government. When you take a look at the rural economy, after these years of farm prosperity, maybe some lower prices coming out now, you just passed a farm bill. What do you see as the state of the rural economy? And especially for our viewers, what investment opportunities may there be?
There is real opportunity in rural America, and there needs to be a better understanding of what those opportunities are. There's small business growth, this new bioeconomy where we basically can take crop residue, livestock waste, and turn it into materials like chemicals, polymers, fabrics and fibers, a whole new business opportunity. It's one of the reasons why we were excited about the recent announcement of the Farm Credit Administration system, 8 banks in the Farm Credit system, putting together what is called a Rural Business Investment Company. It's going to allow those farm credit systems to invest in equity in small business development. We're looking forward to a conference that's going to be held on July 23rd and 24th here in Washington, D.C., where we're going to encourage more outside investment to look at business deals as well as infrastructure. You know, we obviously need Congress to act on infrastructure projects, but in the meantime, we can encourage the private sector to take a look at water projects, to take a look at other infrastructure projects in rural America. It's helping to create jobs and will help create jobs that help to revitalize and renew the rural economy. Well, again, long overdue. Excited about the Farm Bill because it creates new opportunities for us to leverage resources from the federal government with the private and nonprofit sector.
And where are we standing on that Farm Bill? It just passed in February. The implementation stage is beginning. It's a lot less exciting than watching the day-to-day politics, but this is where the real work begins.
Well, for us at USDA, we're excited about actually implementing a Farm Bill. We're excited about the fact that we're already helping with disaster assistance. We put that in place April 15th. We've had thousands of producers apply for disaster assistance. We've already sent out millions of dollars, which is providing help and assistance. Next step in the process is to focus on commodity producers, helping them with the information they'll need to make an important election at the end of the year, focusing on the development of a regional conservation partnership, which is also going to help leverage additional dollars in that rural economy, as we spoke about earlier, as well as the Research Foundation, opportunity to substantially improve and investment in research. So a lot of exciting things going on at USDA.
And thank you very much for your time, Mr. Secretary.
You bet.
All right, thank you so much to both of you for that. Well, the U.S. imposes further sanctions against Russia, targeting Vladimir Putin's inner circle. More on the White House's efforts to thwart that crisis next. Welcome back, everyone. It is time for Global Outlook. A Putin confidant, Rosneft CEO Igor Sechin, is on the list of those sanctioned by the U.S. as tensions mount in the Ukrainian conflict. Sechin is considered to be one of Russia's most powerful men. Bloomberg's Ryan Chukolt is joining me right now with the very latest. And Ryan, tell us what you know about this guy. I understand you have met him. Have you interviewed him? What was he like?
Well, I've tried to interview him. I stood with a group of other journalists that were trying to do the same. He doesn't give a lot of interviews. It was here in London. You know, anyone who has seen Igor Sechin in action will tell you he's definitely a very colorful personality, very intense, very theatrical. Interesting, you know, back in Soviet day, during the Cold War, he fought alongside, or served, I should say, the Soviet Union alongside Cuban fighters in places like Mozambique and Angola. And then in post-Soviet Russia, he landed in St. Petersburg. That's where he met now President Putin. He worked with Putin then in the mayor's office in St. Petersburg. He was a very senior official in the Russian government himself until the Russian government decided that they shouldn't have senior government officials also running state-backed companies. So since then, he has simply been the CEO of Rosneft, though I shouldn't say that because, of course, Rosneft is the world's largest publicly traded oil producer.
So what's this going to mean, Ryan, for Rosneft and other big companies?
Well, it's an interesting one. I guess it's worth remembering that Rosneft itself has not been sanctioned. So individuals get sanctions and companies get sanctions. In this case, it's just the individual, just the CEO of the company. Now, it's still not great, though. If you think about it, Exxon, for example, does business with Rosneft. They're hoping to drill what many people are calling the most important well of the year in the Arctic, starting in August with Rosneft. And then think about BP. BP actually owns about a 20% stake in Rosneft after they sold their stake in their joint venture. Bob Dudley, the CEO of BP, he's an American citizen. He's going to actually have to go to these board meetings. So from an optics perspective, from PR, this is difficult for these companies.
Ryan Chukolt, thank you very, very much. That does it for today. I will see you back here on Bloomberg TV at 3 p.m. for Street.
6:56 past the hour, which means Bloomberg Television is on the markets. I'm Olivia Stearns. We're about 30 minutes into the trading day. Let's get you caught up on the market. Stocks are rising here amid a flurry of deal activity. The broader S&P is up by about 0.3%. The NASDAQ up by about 0.25%. We're continuing to see a bit of sell-off in tech stocks, in particular in Amazon. Amazon shares down again today, down about 3.5% right now. This is after the stock fell nearly 10% on Friday following news that Jeff Bezos plans to continue his so-called spending spree. Let's also show you what's happening on the Treasury market quickly. You can see bonds are selling off a little bit with yields coming up a tiny bit. The yield on the 10-year note up basically 2 basis points at this point, trading at 2.684%. Well, the bond trade that everyone loved to hate in 2013 is this year's biggest winner, with longer-dated bonds returning 4 times as much as stocks. Here to explain how that could be possible, especially in a year when bonds were supposed to be among the biggest losers, is Bloomberg News' Lisa Abramovich. So Lisa, why have the longest dated bonds done so well?
There are a number of reasons why. The first reason is the pension funds and insurance companies that last year invested heavily in equities. They wanted to gain enough returns so that they could pay back all of their obligations and sort of match their obligations and their liabilities. They did that. They became really well funded, and now they've got all this money from the stock gains. They want to put that back into bonds, and they typically target the longest dated bonds. So they've plowed, billions of dollars into 30-year bonds and generated this incredible rally. In 30-year treasuries, it's the best rally in more than 2.5 decades, and it's more than 4 times the returns on S&P 500. So this is an incredible return, especially because last year there was this rotation out of duration, rotation from these bonds.
It's incredible. It's counterintuitive, frankly, because what we heard about was that we were going to continue seeing this huge rotation out of fixed income and into the equity markets after the S&P was up 30% last year. So how long do you think does it look like this run can continue?
That's a great question. I think everybody's asking themselves the same thing. I mean, right now, they're seeing money still continue to go toward the longest duration bonds. So this doesn't seem, people haven't stepped away from it yet, but,
But even as interest rates are going to rise, we had David Joy on earlier saying he sees the 10-year at 3.2%. I mean, 2.68%, that looks pretty low if you think the economy is going to pick up.
Without a doubt. I mean, you've got 30-year bonds right now that are yielding 3.4%. By the end of the year, people think it's going to be over 4%. So, that's what economists, that's the consensus bet. I think that the question is the economy. How much can it really accelerate right now? In the beginning of the year, people were saying, we kind of think maybe it's slowing down. Maybe we're in this sort of low-growth decade, right? And now people are starting to change that view and saying, maybe things could accelerate much more than expected, in which case, if inflation picks up, this is the absolute wrong bet to be in. So it could be people are coming in at the exact wrong time. But we don't know. I mean, it could be, and not to mention the fact that these insurance companies and pension plans, they still have a lot of money. And there's not that many of these 30-year bonds for them to buy.
And so does it look like the appetite is still on the longer-dated maturities?
Yes. Absolutely. I mean, you've got this sort of, the short end of the curve is still, people are now betting that there's going to be a flattening. Right. You're going to start seeing, the shorter dated paper start to yield more, and you're going to still see the longer dated paper still.
And whatever the Fed does, it might change the short end of the curve, but they want to go long on the long end.
That's right.
All right, Lisa, thank you so much for joining us. That's Lisa Abramovich with Bloomberg News. We're going to be on the markets again in 30 minutes. And, coming up next, a very special edition of Market Makers.